I think that this is a signal to accelerate institutional adoption. It's a signal that it's okay for insurance companies to think about insuring Bitcoin companies. It's a signal that it's okay for banks to bank Bitcoin and crypto companies. It's a signal that it's okay for Wall Street to start to embrace, endorse, and advocate Bitcoin, right? It's a signal that the president and the administration is going to look at things like Operation Choke Point as hostile to the interest of the industry. I think if you combine that with the pro-business and the pro-American agenda of the red wave, it's pretty clear that this administration wants to grow business in America. It wants to deregulate. It wants to strip away handcuffs. It wants to lower taxes. It wants to accelerate progress and then the passage to the future in the United States. And all of that, I think, is just very auspicious for Bitcoin and the digital assets industry.
Saylor begins by addressing the critical changes in the political and regulatory environment. With the repeal of SAB 121 seemingly imminent, he sees a gateway opening for banks to actively custody Bitcoin. This potential shift could integrate Bitcoin into the global banking system, unlocking opportunities for institutional adoption on a massive scale. The implications are profound. Bitcoin ETF, long stifled by regulatory hurdles, might finally receive the green light. Banks and financial institutions could embrace Bitcoin without fear of resistance from government agencies. For Saylor, this marks the beginning of a Bitcoin-centric financial renaissance, signaling the end of what he describes as a hostile approach under previous administrations.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
What I would expect is that SAB 121 will be either withdrawn by the SEC or it will be repealed, and the president will support the repeal. That opens the way for banks to custody Bitcoin. That opens the way for the entire banking system to embrace Bitcoin. And I think for Bitcoin to grow by a factor of 100x from here, we need for the banking system of the world to support Bitcoin. So if I think about the consequences for Bitcoin, I think what this means is it's an acceleration of pro-Bitcoin regulations. I think that we'll see in-kind creation and redemption of Bitcoin ETFs. I think we'll see the repeal of SAB 121. I think we'll see support for Bitcoin within the banking system from the banking regulators, from Treasury, from OCC, from SEC. I think you'll see more supportive legislation from Congress. I think it will be approved by the White House. I think that this is a signal to accelerate institutional adoption. I think that the previous administration had been hostile to Bitcoin mining, hostile to Bitcoin banking, hostile to the Bitcoin ETFs, and the failure of Silicon Valley Bank followed by the shutdown, effectively the forcible liquidation of Silvergate and Signature, even though those were solvent banks. They were perfectly healthy banks that were actually forced into receivership by a hostile administration. I think that had caused the banking establishment, reasonably enough, to be skittish and to be conservative and a little bit slow to adopt Bitcoin because they could see there was resistance in the administration. I think that now, with a new administration, with President Trump coming to the Bitcoin conference in Nashville and saying, I will end the war on crypto, I will end the war on Bitcoin, I will support Bitcoin, we will not sell our Bitcoin, we're going to make Bitcoin in America, America is going to be the capital of Bitcoin, right? The fact that he said that, I think that sets the tone at the top. That means I think, number one, it seems inconceivable to me that a head of the Treasury or the CFTC or the SEC will be appointed that is anti-Bitcoin or anti-crypto, right? That seems quite obvious. We know that Trump is all in on crypto, all in on Bitcoin. So I think that we'll have favorable, supportive cabinet members. I think the second thing is we know we'll have a supportive Congress. Congress was already in favor of Bitcoin, before November 5th. We'll have a supportive Senate. The Republican senators were already in favor of Bitcoin. The Democratic senators have been sidelined and won't have any power in this regard. So Elizabeth Warren's agenda is going to become largely a thing of the past and irrelevant in the White House, in the Senate, and the Congress of the future. So I think that all of this suggests an acceleration of institutional adoption. It's a signal that it's okay for insurance companies to think about insuring Bitcoin companies. It's a signal that it's okay for banks to bank Bitcoin and crypto companies. It's a signal that it's okay for Wall Street to start to embrace, endorse, and advocate Bitcoin, right? It's a signal that the president and the administration is going to look at things like Operation Choke Point as hostile to the interest of the industry. I think if you combine that with the pro-business and the pro-American agenda of the red wave, it's pretty clear that this administration wants to grow business in America. It wants to deregulate. It wants to strip away handcuffs. It wants to lower taxes. It wants to accelerate progress and then the passage to the future in the United States. And all of that, I think, is just very auspicious for Bitcoin and the digital assets industry.
Saylor predicts Bitcoin's growth will shift from gradual to explosive. He contrasts two scenarios. Under a restrictive regime, Bitcoin would grow steadily despite resistance. Under a pro-Bitcoin administration, however, Bitcoin could blast up, accelerating at an unprecedented pace. Saylor attributes this potential growth to the convergence of several factors: pro-Bitcoin legislation, institutional support, advancements in technology, and a global appetite for decentralized financial solutions. This momentum, he argues, will not only benefit Bitcoin, but also rejuvenate the broader digital assets industry.
I think if you had asked me before November 5th what's going to happen, I would say in the event of a blue wave, Bitcoin's going to grind up against resistance and continue to grow, despite a not progressive regime, but it's going to continue to grow because it's unstoppable. And I would have said the digital assets industry is going to continue to shrink and continue to decay in the event of a blue wave. So there was a bifurcation, Bitcoin going up 20 or 30% a year and digital assets falling 20% or 30% a year in the event of a blue wave. In the event of a red wave, I would say Bitcoin is going to blast up, not grind up, but blast up. It's going to power up much faster because now you have a pro-Bitcoin president, a pro-Bitcoin Congress, pro-Bitcoin legislation. We'll have pro-Bitcoin banks. We're going to have pro-Bitcoin institutions. We're going to have pro-Bitcoin mining, etc. So I think that Bitcoin goes from that powering up at 20% to blasting up much faster than that. And I think that the digital assets industry goes from decaying 20% now to blasting up and growing, because the digital assets industry, it can't really prosper in the absence of a digital assets framework, which means three criteria. It needs to be ethically sound. It needs to be economically sound, right? And engineeringly sound, technically sound. It needs to be sound technically, physically sound. So a technical ethical economic framework in order to build an entire digital assets industry. So there's no enthusiasm for putting that forward in the previous administration. Now there is enthusiasm, and we'll get one. We've got a promise that we will get a digital assets framework. And I think within that framework, there's clearly a lot of value to be created. If you create digital securities, then what that would mean is you could tokenize a share of Apple stock and you could trade it on a digital exchange on Saturday. And you could even tokenize the Apple stock and you could take self-custody of your Apple shares on your iPhone. And if you can have your photos on an iPhone and your books on your iPhone, and if you can have your files on an iPhone, and if you can have your Bitcoin on an iPhone, why can't you have your Apple stock on an iPhone? So I think that a digital securities framework is very compelling. People want to trade on the weekends. They want to trade on the evenings. They want to, you know, what happens right now? There's like one company that can trade Apple stock. What happens when there's 1,500 companies that can trade Apple stock? What happens when 8 billion people or 6 billion people with smartphones? What happens when people with Android phones can custody Apple stock, right? It's not a complicated idea. Is it technically possible? Sure it is, with modern cryptography. That we solved the problem with Bitcoin, right? And modern cryptography has solved the problem. It's just there's no legal, ethical, technical, agreed upon technical protocol to do it. So I think digital securities are very powerful, and you could see first billions, then trillions, tens of trillions of dollars of analog securities become tokenized and become digital. And I don't have an ethical problem with it. For example, I wouldn't recommend that you invest in Apple or Amazon or Facebook or Google over Bitcoin. The truth is, I would recommend Bitcoin over my own stock. I would recommend it over anybody else's stock. It's Bitcoin, right? I mean, so I wouldn't really recommend any of 50,000 public companies. But I would say the world's a better place if they all tokenize, if they're all digital, right? I mean, it's pretty clear if on Sunday afternoon you have the option to buy, sell, trade, or transfer your stock, you're empowered. And that's good for the world, and that's good for the people. I think if you move to, say, digital currencies, I consider a Tether or Circle, a stable coin, a digital currency. I think that a clear regulatory framework where a corporation can issue them, back them by US dollars or US dollar equivalents like short-term Treasury bills. I think if you can do that, that's a good thing for the world. If Tether's going to do it, we should have Tether relocate to the United States, give them a license in the US and let them do it. And I also think, though, you ought to let JP Morgan do it and Goldman Sachs do it. And I think you ought to let Circle do it. I think there should be a competition in the market. And if it turns out that Tether and Circle are better than JP Morgan and Goldman Sachs, then I think Tether and Circle should issue all the digital currency in the world. If you're the United States, you just want, you don't want $150 billion of currency. You want $15 trillion worth of US digital currency to be circulating. So I think that that's good for the world, good for the dollar, right? Because you said, well, how does Bitcoin deal with 150 other currencies? Or maybe there's 120. Well, the dirty secret is they're all pegged to the dollar, except for the failing ones. There's only two types of currencies there's three types of currencies in the world, Natalie, if you break it all down.
For Bitcoin and digital assets to reach their full potential, Saylor emphasizes the need for a sound framework that balances ethics, economics, and technology. He envisions a future where digital assets are integrated seamlessly into the financial system, empowering individuals and institutions alike. From tokenized stocks to digital currencies, the possibilities are endless. Saylor believes that with the right policies and infrastructure, the digital assets industry could unlock unprecedented value and transform global finance.
Please like and subscribe my channel.